and thank you everyone for joining us today. As Will mentioned, I'm Jeff Lackey with Sallie, and we hope that this is going to be a quick overview of some of the undergraduate and graduate loan changes that are happening, and that hopefully it'll give you a starting point to kind of learn a little bit about what some of the funding sources and whatnot that you will be able to research for your upcoming potential educational journey. And so with that, some of the objectives for the day that we would like to cover, we want to talk about why now is the time to know more about these changes and the future program change options that are available. We're also going to address some of the federal policy changes and how they may affect your gap or your unmet need funding options. And I'll define what those two terms mean here in a second. And then lastly, we're going to talk a little bit about or do an overview of the popular gap or unmet need funding options available for future funding of education. And so with that, the first thing that we're going to need to understand is the cost of attendance and what it actually means, as well as its use. And so your bottom line to attend any college is not the cost of attendance. It's going to be the net price. Net price is the cost of attendance minus any free money from, let's say, like scholarships and grants. Free money being money that you don't have to pay back. This is going to be the portion of costs that students and families will need to make decisions on the best way to pay based on their unique family circumstances. And so net price is usually covered with a combination of resources from income and savings. It can also include work, it can include loans, and it can also include a few other options. But here's a key point. The sticker price of a college is not usually what families end up paying. There are education-related costs that are billed directly by the college, such as tuition, as well as if you're living on campus, there might be housing and food costs. So if you think of like a dorm room or a meal plan, there's also going to be fees from the colleges, such as health fees. There's activity center fees, possibly. You'll have parking fees or even lab fees, for instance. Even with direct costs, there are different meal plans, and many colleges have different costs for the different dorms that are available. So think of maybe like a single dorm room or a double dorm room, for example. Think of these costs and think through them to help you determine what your actual direct costs are going to be from the college or university. Along those lines, there are also what they call indirect costs. And these indirect costs are typically not included on your bill from the college or university, but they do have to be considered as something that needs to be funded. These costs are going to be for your books, it's going to be for your supplies, your computers, etc. So if you think of, let's say, transportation costs, for instance, if you're living off campus, you're going to need to factor in these costs and what it means for your food or your meal plans. These are many times your most flexible costs and also most overlooked. So to make sure that we take these into consideration when you're looking at your funding sources for college, we want to make sure you know that these are what they're available for or what they are and what your options are. So again, if you can take, into account, maybe potentially acquiring used books, maybe taking public transit, living with roommates. These are ways that you can kind of flex these costs and make them a little bit easier on your budget. And you may not need to consider professional licensing exams or fees this year unless you happen to be, let's say, maybe in a graduate program, but you will need to think about them at the very least in the final year of your program. So part of the reason why we addressed what the cost of attendance is and such is so that we maybe have a better understanding as to some of the funding sources that typically take care of these costs and what some of the changes were to some of these funding sources. So before we take a deeper dive into the two education loan types that were mainly affected, it's important to note that as a result of what is called Public Law 119-21, otherwise known as the One Big Beautiful Bill, there are key student aid policy changes. And although there are some policy changes that happened within some of the free or gift grant aid programs, today we're going to be focusing on the student loan policy changes. And we always advise students and families to pursue as many free aid options like scholarships and grants first, and then we learn about funding sources that are available when filing the free application for federal student aid or the FAFSA. And then we always have students and families consider looking for other aid sources like private loans and payment plans to help with gaps and unmet need to fully fund education related expenses. So the first key change outlined here is the elimination of the Graduate Plus Loan Program, abbreviated to the Grad Plus program. The reason why we're starting our discussion regarding this program first is due to its impact and the change to what has been a main graduate funding source for many years. New federal direct borrowers, which are students that do not have federal direct loans prior to July 2026, need to know that the Grad Plus program has been eliminated. New borrowers will still have the ability to borrow federal direct unsubsidized student loans. And private student loans will also be available and typically will have eligibility standards based on individual lending programs offered, which students may find useful to fund the remaining portion or gaps that are left over by some of these federal changes. Please note that at a high level, again, we're not going to get into tremendous detail on this, but there are some provisions that allow for legacy or grandfathered students that have current federal direct loans, allow for them to have eligibility in the Grad Plus loan program in the future. So if you are a current student, in the same program or field of study while attending the same institution prior to June 30th of 2026, and you have received a direct loan prior to this period, please go to and discuss some of your funding options with your financial aid office that you're attending. But as stated, for any new borrowers entering into a graduate program and you have not previously borrowed a federal direct loan or Grad Plus loan for this program prior to July 1st, you will be considered a new student and will not have access to the Graduate Plus loan program. There are going to be new lifetime aggregate caps. So for all undergraduate, graduate, and professional loans, they will now count towards a strict lifetime limit of $257,500. The One Big Beautiful Bill introduced these own loan annual and aggregate loan limits. However, undergraduate students will not see changes to the direct loan programs as well as the amount. So if you think about your dependency or independency status, loan amounts based on the year in school, your loan limits, all of that will be available after July 2026. But the dollar amounts that you accrue will count and potentially be combined with any graduate loan volume, graduate loan amounts that you borrow will go towards the aggregate cap. So for graduate students who have not borrowed a federal direct loan prior to July 2026, you can borrow up to $20,500 per year with a $100,000 aggregate limit. If you happen to be going into a professional program, so think of medicine or dentistry or law, for instance, students that are going into those programs can borrow up to $50,000 annually with a $200,000 aggregate limit. And now, again, that is in the direct unsubsidized loan program, not the Graduate Plus loan program. Due to these aggregates, it's imperative that you evaluate the full cost of your education program from start to graduation and include indirect costs in those evaluations. So all that information we talked about on our previous slide, you are potentially have the ability to borrow to take care of all of your direct and indirect costs. And you will need to forecast that out over the duration of your financial or your educational journey to make sure that you will be within the aggregate caps. So while annual and aggregate limits remain unchanged on the undergraduate side, your annual loan eligibility could potentially be prorated or reduced if you enroll less than full time. This is another change. In the past, students, as long as you were at half-time status or above, you had the ability to potentially borrow up to the full annual limits in the undergraduate and graduate unsubsidized direct loan limits. With OBBBA, there is going to be a proration if you are not attending at least full time. So the amount eligibility will be confirmed by your financial aid office or your college or university. So if you have any questions on how that will impact you, definitely visit with your financial aid office. As mentioned before, private student loans will still be available and typically will have eligibility standards based on lending programs, which students may find useful to fund the remaining portion or gaps left over that these federal changes no longer address. And because these are private student loans, they do not factor into the federal changes. And lastly, OBBA streamlined federal loan repayment plans. So borrowers with new loans that are made on or after July 1st of 2026 can be repaid using only two plans, a new standard repayment plan and then the new income-based repayment plan or RAP. Students that are entering repayment in 2026, you will have access to the current plans that can be found out at studentaid.gov, as well as have access to these new plans that were created from the One Big Beautiful Bill. So let's address another federal loan program that has had some changes, and that's going to be the Parent Plus Loan Program. And the Parent Plus Loan Program loan is a program that allows for parents of a dependent undergraduate student to borrow to help pay for their school. So in the past, parents borrowing under this program used to be able to borrow amounts that would fully fund the gap or unmet need, which is the cost of attendance minus any other federal, state, or institutional or private aid a student is receiving. Parents can no longer borrow whatever they need to pay the balance and now face a $20,000 annual cap per student and an aggregate cap of $65,000 over the lifetime cap per student. Again, please note that certain parents with Parent Plus loans, very similar to the Grad Plus students on our previous slide, there will be a current legacy or grandfathered provision. And so therefore, if you have borrowed a Parent Plus loan prior to July 1st, 2026 on behalf of an undergraduate student that is in the same program and has not left that program, that basically the Parent Plus loan will have the ability, the Parent Plus loan borrower will have the ability to borrow loans for up to 3 academic years or the remainder of a student's expected time to reach their completion or their credential, the lesser of the two. The student must remain continuously enrolled in the same program of study at the same institution. And so some of you might be asking, why is this important? Well, in academic year 24-25, approximately 5% of all full-time undergraduate students at four-year schools had parents who took out a Parent Plus loan. And the average Parent Plus loan borrower at 28.1% of four-year schools borrowed more than $20,000 annually. So more than 25% of Parent Plus borrowers cannot borrow enough to fully meet the college costs now. So the projected Parent Plus borrower indebtedness at 45% of four-year schools will exceed $65,000. Also, too, 9 in 20 parents, plus loan borrowers, will not be able to fully fund their education through the program, in part because of these new aggregate limits of $65,000, which means that borrowing the annual maximum for a four-year undergraduate program would most likely see parents maximize their aggregate limit before a student completes their degree, and the parent would not be able to borrow any more funds under the Parent Plus loan program. So parents may have to resort to another funding source for the duration of the student's academic term, or they may want to research other forms of funding like a private loan program, either applied for by the parent or under the student's name that will possibly allow for funding over multiple years with potentially no yearly caps or aggregate limits. And also note too that the Parent Plus loan has student and parent application requirements. However, the parent must complete the Parent Plus loan application as the loan is in the parent's name. A Parent Plus loan also too is a credit-based loan, but likely not the way that you're thinking. Parent Plus loan application looks for a lack of negative credit, not necessarily positive credit. And the borrower must meet the U.S. Department of Education's definition of parent and student enrollment status does matter. Student must be enrolled at least half time, which typically generally means six or more credit hours. Whereas private loans, they are credit based. They may have less stringent enrollment requirements. They can either be in the name of the student, or in some cases, lenders can offer private loans that can be obtained in a parent or a sponsor's name. Some parents or the sponsor may opt to co-sign on a student's loan instead of obtaining loans in their name only. And students, as well as parents, or a family member or a sponsor, are encouraged to research all loan programs and options and feel free to choose which program would be best for your situation. So the more options that you have to pay for graduate school, the better. By weighing the features of each, you can find the best option for you. This chart here demonstrates some of the characteristics of the Graduate Plus Loan program relative to a generalized version of a private loan program. And parents, you may see that many of the characteristics on the left of this graph are similar to that of the parent of the Grad Plus. With some differences being who borrows the money and who is responsible for repayment. So essentially, many of the features that you see on the left of this graph can also be utilized in comparing a Parent Plus loan with the private student loan. Some of the things to note on this slide, let's talk a little bit about rates. Highly qualified legacy or grandfathered applicants of Graduate Plus loan borrowers may be better served by exploring private education loans, which may offer lower rates than federal direct Grad Plus loans. You may find that the payment flexibility under the federal loan programs, they do offer solutions that let borrowers extend their term or base their payments on income. Many private education loans offer flexibility for making payments as well, but you'll have to research each one of those individually and see which programs best suit your needs, as some options may increase the cost of the loan over time. You may also find too that you have the ability to save some money with federal or private loans. Consider, making interest payments. Will the lender or the government allow for interest payments while you're in school to help you save money and kind of help reduce some of the interest prior to capitalization on the loan? So basically, by saving that money and making that payment, that interest payment while in school, it allows you to avoid unpaid interest being added to your loan's principal amount. Also, too, some of you might be thinking about, well, if I'm looking at loans, why wouldn't I not consider maybe a credit card, for instance? And credit cards, they're not necessarily designed specifically for education financing. And over time, they may be more expensive and actually have less flexible options compared to student loans. Credit cards, they can be attractive, due in part to the relative ease of being able to pay your bill. You may also find that there's potential reward programs that you get with credit cards, and there's obviously the quick ability to pay. You just simply, either scan your card or give the number securely over the phone, and your bill's paid. However, one thing to note is you want to make sure that you understand how interest compounds. You may want to read more about your limited time rate or intro rate that may change before your ability to repay that charged debt is fully paid off. You may also want to check your credit limits, which may impact or max out your credit utilization rate, excuse me, and may have potential detrimental effects on your credit. And then also, two, potential service or convenient fees that may add additional charges to your bill. So again, if you're thinking of making a $2,000 or $5,000 payment on a credit card for your tuition bill, and there's a 2.5% convenience or service fee, that is money in addition that you are paying on top of the bill of $2,000 to $5,000 or so. Lastly, two, talking a little bit about financing options. The best choice for financing a graduate education might be a combination of federal and private education loans. And you can even throw in possibly a tuition payment plan if it's offered by the college or university. You are allowed to use a combination of each of these options as long as these combinations do not exceed the cost of attendance at the school. And as noted previously, private education loans are credit-based loans. So as such, it's important to know what your credit health is and improve it if you can. And according to Consumer Reports, almost half of all consumers in 2024 who volunteered to check their credit reports found mistakes in them, and more than a quarter of those found serious mistakes in them that could damage their credit scores and financial opportunities. So both you, the student, as well as a parent or a sponsor of a student, may find it very useful to start taking a look at your credit report now. See if there's any mistakes or any derogatory reporting that you may want to address and potentially have investigated to get cleaned up before you have to apply for a credit-based loan. It's great advice to take some time and take a look into that if you need to. So with some of these changes, I know that we talked, kind of did an overview of it. We know that it was a quick synopsis, especially of some of the federal self-help aid changes, along with some of the comparisons between a couple of the most popular gap and unmet need options. And because higher education is a large investment, it is imperative that you research your options fully. So if you happen to have your smartphone available, feel free to go ahead and take a pic of this QR code on the screen where you can find access to California Coast Credit Union's free financial wellness center, and where you will be able to get more information on college planning and financing resources.